Alrighty guys, what is going on? Welcome back to another episode. In today's video, we're going to be talking about ARK Invest's new ETF, ticker symbol ARKX. Now this is going to be a space exploration ETF. I'm really excited about it, and in today's video we're going to be breaking down should you buy this ETF and some of the most likely companies that are going to be held in this ETF. So I hope you guys enjoy it. If you get anything of value, hit that like button and subscribe. If you guys have any questions or concerns, go ahead and ask them down in the comments. And if you guys want to learn more about investing in the stock market, go ahead and check out my course, and you guys can use promo code DIVIDENDS to get 50% off. We talk about fundamental, technical analysis, dividends, REITs, taxes, pretty much everything you need to know for investing in the stock market. So make sure you guys check it out. And guys, we got merch, anything from t-shirts, hoodies, and even a fanny pack. I'll put a link to that down below so you guys can check that out too. So now, roll the intro, let's go. Bam. So now for those of you that don't know what ARK is pretty much an investment firm that offers a variety of awesome ETFs, anything from tech giants to even autonomous driving cars. I think this is a very, very sought after investment firm because this past year they finished up over 170% up, which is crazy because just the S&P 500 went up just about 16 to 17%. So this more than doubled, tripled, and quadrupled what the S&P 500 did. Now, a lot of people love Cathie Wood, which is the portfolio manager for all of these ETFs, because she pretty much called out Tesla a couple years ago, and obviously it paid off very, very well for her. But overall, just the past week, Cathie Wood came out and said that they are going to be offering a new ETF. And now, a lot of beginner investors and a lot of people are saying, oh my gosh, this is going to be the money ETF. I'm super excited about it. And yeah, I am too. But I need you guys to understand that an ETF like this definitely does carry a little more risk than a traditional, tech ETF or an S&P 500 index ETF. The reason why I say that is because on average, Cathie Wood holds anywhere from 35 to about 55 stocks in their ETFs compared to the S&P 500, which has over 500 companies in that ETF. So you get diversification, most of the time you get dividends, and overall, it's a lot lower risk, but still has a pretty good reward of around 9.8% every single year. So with this ETF, I definitely think the long-term reward is there, but you guys need to understand is this is going to be a pretty volatile ETF. There's ETFs out there like this. Ticker symbol UFO is another space exploration ETF. And yeah, over the past couple of months, we've had beautiful growth, but there has been some days where this ETF is down 2, 3, 4%, but then comes back and is up, 6, 7%. So it's definitely a little more volatile than a traditional ETF. Now, me personally, I think they're going to have this expense ratio anywhere from around 0.6% all the way up to about 0.75%, because on average, that is pretty much the expense ratios of all of the other ETFs that Cathie Wood does offer, because that's how they make money, is through those expense ratios. So I think that it's a pretty high expense ratio, but it's still under my 1% rule, which is really, really strong. Now, Cathie Wood really hasn't came out and picked individual stocks for this ETFs for their holdings yet, because if she did, a lot of retail investors would flock to those stocks. And on the news of this, a lot of these space exploration companies went up 7% or more in value on the stock price, which is crazy because this is just one investment firm. And imagine if people follow her. Imagine if other investment firms follow Cathie Wood there, and then we're going to have a lot more money coming into the space exploration, which overall could definitely look really, really strong for the future. But overall, the top 3 companies that I believe are going to be in this ETF, the very first one is probably going to be Virgin Galactic. This is one of the most sought after space exploration stocks. This is backed by Richard Branson, and he really wants to make commercial space travel where you can kind of fly up, go to, look around and then fly back down. He doesn't really want to leave Earth, so to speak, just yet. Maybe in the future, but overall, you guys can see some pictures and some designs he has. Overall, it's pretty interesting, but definitely does carry a little more risk. You have to look at, okay, how likely is this going to happen in the next year or two? Probably not anytime soon. I believe that probably within the next 3 to 5 years, we could see something like that, but I think it's all about understanding that there's going to be some volatile swings with these. Now, the second company that I believe is going to end up in this space exploration ETF is MaxR Tech. So really what this company does is they do a variety of different space exploration things. They do anything from satellites, they do anything from spacecraft systems and development. So I do think this definitely is one of the companies that will probably end up in there. You know, I think that this is a sought after stock because one of the popular space exploration ETFs, UFO, this is their top holding in it. So I definitely think Cathie Wood is probably going to put that somewhere in this ETF. Now, the third company that I believe is going to be in this ETF is called Urdarium, I believe is how you say it, communications. So they do a variety of different things from satellite communications. And the thing about it is I believe this is going to be in it because Cathie Wood is a huge Tesla and Elon Musk fan, for those of you that didn't know that. And the thing about it is SpaceX uses this company. They have a variety of different deals with this company for the Falcon 9, which is pretty much SpaceX's greatest and most powerful rocket that they have. So now a lot of people always ask me, what is a fantastic strategy to invest? Well, here's the thing. I think dollar cost averaging this ETF is going to be phenomenal because it's going to be a little more volatile, and you guys can use that volatility to your advantage. So if the stock goes up, you still make money because the stock value goes up, but the beauty is when the stock or ETF falls, you just average your position down, hold it for the long term, and you guys will be just fine. But overall, I definitely believe this ETF does carry a little more risk. So it's always smart, have maybe some bonds, ETFs, or blue chip stocks to act as your defense in your portfolio. But obviously, if I was gonna rate this 1 out of 5, I probably would fall anywhere from about 3.5 to 4 stars. The reason why is because I definitely believe there's going to be a little more volatility, a little more risk, but overall a lot more reward. So I hope you guys enjoyed it. If you guys got anything of value, hit that like button and subscribe. If you guys have any questions or concerns, go ahead and ask them down in the comments.